Anyways, welcome everyone. Welcome back here with Andrew and Derek here. I already saw someone, I think Bashe. Let's get going with the opportunity. I want to hear more about it. So we will get to that. Let me just do some keeping things here. I know especially as the next couple of minutes people trickle on. Thanks for being back. I've got there you go, UConn girls. I mean, come on, that's like a given. Come on, of course, those UConn girls. I mean, don't they always win?
Easy money, I
Anyways,
think. So
yeah, right, right. All right, I gotta quit looking at the chat and all the sports stuff. You'll get me going. So, um, we're gonna jump in. So today's agenda is I'm gonna take a few minutes in the beginning, first 10 minutes, to dive deeper into a couple different concepts or things that even you seasoned veterans in the retirement accounts might need a good refresher on. And then we're going to jump right over into Derek and Andrew, and they're going to dive deeper into what they're doing and their opportunity. And and I've had a couple people reach out to me yesterday saying, "Oh, I want to hear more from them. I'm interested." And so I want to give as much time to them as possible. Even someone reached out to me, guys didn't tell you this. They're like, "Hey, look, I want to do this in my own city." I love that. You know, the idea from having these webinars is to give you the education, and some of you might have the time, the energy, and the background to do some of these things on your own, which is phenomenal. All for it. Like me, I used to flip homes, and then after doing it long enough, I was like, "Cool, I learned it. I'm good. I'd rather have someone else that I trust to operate it and do it." So that could be the same here too as well. So that being said, a reminder: not financial advisors, attorneys, or CPAs. Our disclosure, as always, we do not guarantee anything. At Horizon Trust Company in particular, we want to help and find individuals that have an old 401k with a previous employer, uh, or an IRA, and help you get involved and engaged in something you want to invest in, something different. And one thing I wanted to share from the beginning as well is any opportunity. I assume as well, and Derek and Andrew can correct me later if I'm wrong on this, but any opportunity that you typically invest in, let's say you're going to put 50 or $100,000 into a deal. Well, let's say your old 401k only has 10 or $12,000. That's why I hear this all the time. Like, I only got $30,000 or whatever the number is. You can, in almost all cases, still be an investor. And let's say that you have $32,000 in your IRA and $68,000 outside your IRA. You can go in for $100,000. Now it's two separate, entities. Basically, it's your IRA and it's you. But it also can help you get there. You might have $10,000 in old 401k, and you combine it with $20,000 outside your IRA. So you can do that. And I just wanted to share that as well with many that might not know you can do that. So a couple other notes I've got here. We are doing the chat. We're going to give out the $100 gift card here towards the end, and we got one or two other gifts. And yeah, I think that's it as far as housekeeping goes. So let me jump into it. Share a couple things, and then turn this over to Derek and Andrew. Let's see if view. Are we there? Can you guys see?
looks good on my
Continue
end,
to
Greg.
share. All right. Our disclaimer. There we go. All right. So I'm going to jump right into the dirty here. This is where people get confused and or frustrated and don't understand it. There is something called UDFI and UBTI. So this is related to an IRA investor. I'm bringing this up because I should actually back up. The sexiest thing that I talked about yesterday, I hope you guys remembered. Yesterday, we talked about the importance of compounding your profits. Yesterday, I showed two slides. One of me just investing outside of my IRA, like through an LLC, and one inside my IRA. The difference was hundreds of thousands of dollars. Literally, I think it was $600,000 difference between doing it inside of an IRA or outside of the IRA. Guys, just using the container that we talked about yesterday and investing the right way that's been approved for so long is a huge game changer. So reminder, if you've got the 10 or $12,000, you think it might not be enough. Well, put it in the right vehicle. First of all, invest in what you want and compound your profits, even if it's only compounded on an annual basis, which is the numbers I showed yesterday. So that part's the sexy part, avoiding the biggest expense with the taxes that I talked about yesterday as well. This is a real thing too. I want to just dive into it for a second because people ask about it after the fact. Like, what about this? So this basically applies to an individual who has an IRA, who's investing in an asset class that has debt involved and or ordinary income involved. In either one of those cases, your IRA could potentially, well, you personally could be potentially liable for taxes earned in those investments. Typically, how you figure that out is you actually would get a K1 at the end of the year. Now, when I say you, your IRA would get a K1, and you can tell if there's debt on there in the K1 or if there's ordinary income tax from business, unrelated business tax. At that point, you could have to pay some taxes on those gains. This is not a bad thing. This is just something about from a knowledge perspective. We can help you and share with you if you have any questions on it when you get a K1, give you some input. Also, go and talk to your CPA. But I just want to bring this up because some people think, oh my gosh, this is a terrible thing. It's not. And the reason why it's not is I'll give you an example when it comes to like a debt financed income on a deal. If you have $1 million project, or let's just break it down, $100,000 asset, and you're going to buy a home, let's say, with your IRA, that's 100,000, or you're going to buy a home that's just $40,000. On the $100,000 asset, let's say you only have $40,000, but you then have to borrow $60,000. That $100,000 home that you bought that provides rental income and that you sell someday for, let's say, it increases by 20%. So you sell it for $120,000. Your $40,000 just made $20,000 minus some taxes. You'll have to pay basically taxes on about 60% of the $20,000. Okay. So do that math here. 60% of $20,000 is what? $12,000. So you might have to pay $3,000 or $4,000. So your net on a $20,000 gain, let's just round it even further down, is $15,000. You invested 40 and made 15. Now take an asset with no debt, $40,000, and let's say it increases by 20%. So the 40 goes to 48 and you sell it. You made $8,000. Which is better, 12 or 8, or 15, I should say, $15,000 or 8,000, almost double the return because you use leverage. Leverage typically, not always, but typically is better for assets. You're able to get bigger multiples when you go to sell. So it's not a bad thing. It's just a known thing. Now, the loophole, if you want to call it that, is if you have a self-directed 401k, which many of our clients do, you're exempt. So if you want to know how to be exempt from those taxes, you need to have a solo 401k, which means you also need to have a business. That is a subject alone that I could go a lot deeper into. I don't want to because it might bore you. But if you got more questions, me and my team can talk to you about it. So the other thing is I talked about debt. So can you borrow using your IRA? The answer is yes. Your IRA can borrow. An example I just gave, a $100,000 property can borrow money. Let's say your IRA puts down 20, 30, 40,000, 40% of the acquisition, the balance you can borrow. In fact, we actually have lenders, bankers that like to lend on to IRA holders. They lend strictly on the asset because a non-recourse loan is what's required, when your IRA buys an asset. You cannot personally guarantee a loan. Frankly, that's music to my ears. I learned the hard way in 2008 what personal guarantees mean on loans. They can come after you. And when your IRA is involved and it borrows, there is no personal guarantees. You're not allowed to do that. So it has to be a non-recourse loan. And there's lenders that like to do that kind of lending. We got a Rolodex of those kind of lenders. So if you also are, and I didn't know this when I first started this 20 something years ago, I didn't know I could, borrow non-recourse lending from banks. Has become more and more popular. This is powerful for you wanting to leverage and grow your IRA at a much bigger multiple when you have leverage. So yes, you can do it. There's lenders that will do it. The recourse is the property. So a couple other things here I think that are good. Just I think especially, and these are good, probably some questions. In fact, and I should go back here. Has anyone on here? I'm just curious because it's a little bit more. I'd say it's a level 2 kind of investor, maybe even 3. Has anyone on here borrowed using their self-directed IRA a non-recourse loan? Put in the chat if you have. I'd be curious who has borrowed using their self-directed IRA? I'm not seeing anything in the chat. Maybe the answer is zero. No. Are you guys still there
We
in
got
chat?
some yeses, yeah. We got some
Mm.
yeses and nos.
Okay, good. Maybe I can't see because my PowerPoint, my slides up. So this is
Yeah, it
great.
might be
Okay,
it, but
that's
people are
good.
popping on, so yeah.
All right, good. I don't. So, well, look, it is typically it's a little bit more expensive because it is not there's no personal guarantee, but a lot of times, even though it might be a couple percentage points more, it can still be of great value and worth it. So, moving on here, I think these are all this is just good 101. I want to share with you as far as evaluating different kinds of deals, alternative assets. These are questions you should be asking. Track record. How many deals has Andrew and Derek done? I'll pick on them since I can see them, right? Have they seen some exits, and the money coming back? What happens in the downturn? I think that was actually one of the last questions we had yesterday. And we'll probably revisit here today when we go back to question and answer. Is there debt? What is the debt? This is one of the biggest questions I feel like I've I've made enough mistakes in my career that I've learned these lessons. No one really taught them to me, but it was more by default. Where all of a sudden you're like, "Hey, I got a 1 year interest only loan. I can go buy this asset. Awesome." Well, what happens after 1 year when the loan comes due? Right? It's rates typically go up. There's typically there's more extension fees, etc. So understanding what kind of debt is involved in any one of the projects that you invest in, I think is really, really critical and a great question to ask. Cash flow, what the assumptions are. Like I think a lot of people when they evaluate assets, especially now when rates are higher, the perspective is, hey, if we can cash flow now and a net positive, maybe not a huge net positive, but a positive, it will only set us up for more success as rates go down, and then you go to refinance. So I think that's important too. And then also talking about the exit. What are the exit strategies? These are all really good questions as you decide to analyze what kind of deals you want to invest in. So there's definitely less speculation. As far as due diligence go, I mean, background checks are always really good experience, referrals, just asking the harder questions and fees and how people get paid. I used to be afraid to talk about this. Is back when I was raising money and I didn't have a trust company and I was doing deals. I shied away from fees. And someone taught me a long time ago, was like, no, you need to share, like, okay, here's what your fees are and how they work. And so, charging an interest, an origination point or management fee, et cetera. Like I think that's an important understanding. So everyone knows what the compensation is, how it works, and we're all motivated the same way, typically by success. So, and then do they have money in the game? What are the incentives for investors, et cetera? All good questions. And I usually don't go over this part too much, but I wanted to share it because I think it's something that a lot of our people, as they invest in alternative assets, maybe think of after the fact, after they're invested, like, oh man, I wish I would have asked, or I wish I would have got more information on one of these things. Ask the questions. Worst case scenario, they say no, whoever that may be. But best case scenario is you just have a full picture of a package or underwrite a deal. I focus more now on the deal. I'm sorry, on the people than I do the performa personally. Now, obviously, the performance is important. Documentation is critical. Right at the end, you're making sure documentation's clean. But who you invest with, I've learned. I used to go after and say, okay, I want a bigger cut of the deal. If I'm going to put in money, I want a bigger rate of return. Well, that typically backfired on me because getting a potential bigger return didn't mean that they were better operators. Operators is what makes a deal good. And trust me, I learned that through some hard times as well. A couple other things here as far as mistakes. These are a lot of the mistakes that people make when self-directing. Prohibited, investing with, lending your IRA to your spouse or kids or parents. Can't do that. You can't also invest in your own deal that you're living in. Commingling your money. This isn't what I said in the beginning of my presentation. This is like, let's say I buy an investment property or investment asset with my IRA, and then it has a capital call. Let's say there's a capital call to my IRA. My IRA has no money. Well, what do? I pay it out of my personal pocket. Can't do that. That'd be commingling. Incorrectly titling, we help you with this documentation. Not keeping good records, very important. And then taking money personally. These are the top 5 things I see as far as mistakes that can cost you and that could penalize you with penalties from the IRS. We can help you. We'll guide you through it. If you have questions, you can ask us. You can usually ask your CPA in general for some of the higher, 30,000 foot level kind of questions as well. So really, the whole idea is turning and creating these retirement accounts and creating some kind of predictable passive income. For me, that's what I've always tried to focus on is getting the bigger hits, the 20s, and compounding and bigger. And then as I closer get to retirement age, which I'm so far away from, unless you ask my kids, but when I do that, then I want to just start living off of the interest income, right? The passive income that comes off from these different assets, even if it's 6 or 7% or 8% rate of returns, and you decide to be a little bit more conservative, and maybe just you just end up lending. So these are, I think everyone is different as far as what their goals are. I also believe that you don't need to be all in a alternative asset or all in the stock market. You deciding and strategically picking what's best for you and where there's leverage and what times to take leverage. My son, who's an investor now and he's 23 years old, he takes way more risk than me. Why? Because he has very little to lose, right? So he's like, I'm going to go all in on equity. It's all equity for me. And I get it. That's where I was in my 20s. And then you go through 2008s and you go through, get a little older, and then you want to kind of tweak that a little bit. So you need to decide what's best for you. And as always, I feel like from my experience, and again, I feel like I've seen and been involved in hundreds of deals. The importance of these principles, as boring as UDFI is and UBTI is, and talking about taxes and expenses, it's also one of the most important things you can do personally now. Opening up an account, if you don't have a retirement, opening it up and compounding some of your gains and contributing to it, compounding those gains and your profits year by year into asset classes like, and understand. I can't reiterate this enough. If you have one of these types of IRAs with us or somewhere else, taking action, paying attention, doing your due diligence, choosing something now and not waiting another year, 2 or 3. I feel like I've covered this. I'm gonna kind of wrap up here because I know people want to hear from you guys. So, you being that strategic investor, I just kind of shared this a little bit. I actually went from a strategic investor, which I still feel like I'm strategic, to a little bit more passive. I do like to set it and forget it a little bit more. And I think, you're trying to compound and get fit, you can make 50, 100%. There's no limit on how much you make. You can put $10,000 in a new startup or a new deal and turn it into $100,000. That's exciting. There might be a little more risk involved, but you can be doing that. So look, as I said kind of before, just a second ago, opening up a self-directed IRA if you don't already have one, consolidating old accounts, getting them all into the same kind of account. So if you have different types of, you're at Fidelity and TD Ameritrade and you got a self-directed, you can kind of consolidate. We can help you with that as well. And then deciding what opportunities you want to move into and do it intentionally and spend the 30 minutes every month or every quarter. Because I bet most of you aren't even spending 30 to 60 minutes on your passive IRA investing on a quarterly basis. So, the last couple of slides here, before I pass over, is the checkbook LLC. This is something that many people like to take advantage of to create more speed. What is a checkbook LLC? This is basically an LLC that is owned by your IRA. So, rather than you personally owning the IRA, I'm sorry, your LLC owned by you owning your LLC, your IRA owns the LLC, and your IRA funds the LLC. So now you've got a checkbook control of your IRA. You get to write checks and distributions, or paying bills or vendors on the asset class or capital calls, etc. Profits go back into the checkbook LLC and then back into your IRA. You just can't pay yourself and do any prohibited transactions. But I have more and more sophisticated investors being very strategic about how a checkbook LLC works. This is more for a tier two. It's not for those, the like the previous slide, putting money in and setting it in one deal and then just waiting for it to pay off, which is totally okay and acceptable, but not what everyone needs to do. And the last thing on this slide, as far as checkbook goes, it is a simple process. Well, getting your self-directed IRA set up, and then setting up a checkbook LLC or an IRA LLC, and then that IRA LLC has a bank account, so manage your investments through the LLC rather than contacting Horizon Trust Company every time. Now, if you're looking for the 401k method, if you have a business or want to start a business, you can create a business, and that business can have a 401k that we can help you set up inside that business. And then that 401k can have the checkbook LLC and also do your investing as well. This is meant, and I'll probably go a lot more to questions and answers, and Claudia can help me with this slide as well. Because I want to pass this over to Andrew and Derek. So the last slide or two here is just making sure that you understand the custodian. I started Horizon Trust Company 15 years ago purely because I was referring hundreds of clients to other trust companies, and the service was terrible. It was slow and not hands-on. Hopefully, and maybe you can raise your hand or don't raise your hand and say that your service has been good with us, that you've worked with us. If it's not, we know, and we respond, and we care, and that's the difference. And so speed kills. Speed kills trust companies. Speed kills deals. If Derek and Andrew are trying to close on a deal in 20 days and they go to send you to some other trust company to get the business done, of course, this is a shout out to ourselves. But I will tell you, you will probably miss the deadline to hit to close because they take so much longer than us. Understanding getting your money in a place quickly, saving 2 to 4 weeks is typically 1 or 2% interest points per year just by speed. And $100,000, we're talking about somewhere between $500 and $2,000 in time that we save individuals just by being speedy. So, our goal is helping people get their IRA set. Thanks and welcome back from yesterday. So I'll turn the time over here. I think Derek, you're gonna start us off.
Yeah, I am. Thanks so much, Greg, and great job. That was some really good information. It was cool to see a couple of individuals look like they've utilized that before, and Steve had some good things to say about you, so that's good to hear. But yeah, just to reiterate quickly, and I'm a get to the point kind of guy. I hate when people filibuster for too long, but just so you know where I'm coming at you from. I got involved actually as an investor first. So I was sitting in your seat and I told this story yesterday, so I'll be brief. But those of you that weren't on, I actually had cashed out an old 401k that my wife had from work when I started investing with Andrew and Brick and Mortar before I came aboard as a partner. And quite honestly, I took a hit. I knew I was going to take a hit, but the money was sitting there not really doing much. And I figured doing something was better than doing nothing, even with a hit. But my goodness, I wish I could get back that 20% or so, that I don't know what the exact number was, but give or take 20% that could be, compounding right now and going to work for me. And so, man, I said this the other day, I wish I met Greg, a number of years ago before I started doing that. So I think it's a very smart way to utilize things. And obviously each person needs to decide that for themselves, but really, really, really good information there. So my background briefly, I came out of school, as I mentioned, after playing soccer, realized that was the wrong sport to get good at in America, and didn't pay very well. And so I could either go to Europe and, bounce around and be a broke soccer player over there, and lose my potential wife, which I locked down eventually, and decided to pivot, took a corporate job. And I've always been an entrepreneur. So I started an e-commerce company right at the same time, right out of school. 3.5 years, replaced my corporate income a couple times over, and basically have been running e-commerce and different businesses, and then started investing. And so that I was sitting in your seat not too long ago. I love what Greg was just saying about these are things I had to learn too the hard way. I love his emphasis on operator. You can, obviously evaluate things based on, your criteria, but I'm a big believer you can, make a lot of things look good, but at the end of the day, can the person get the job done? Can they operate? Can they execute? And so I love what he was saying about that. I think that's a core principle to investing. And that was one of the reasons I personally, as an individual investor, got excited about Brick and Mortar. So that said, I'm going to run you through some concepts here. I know you guys want to get into some meat and potatoes. You know, Thanksgiving dinner is about to be served here, so get ready. Uh, but to kick off, just so you guys know, brick and mortar is a premium on-demand workspace in your neighborhood. So shared office, co-working. I'll get into some of the questions you guys had. But here's what we found, and I'll give you the short version again. My partners, Andrew and Adam, had a construction company and they needed a place to work. They'd moved to a new suburb of Chicago. They were looking for a place to work out of. It wasn't there. And so the built infrastructure that people need to work in today's market just wasn't available. They didn't want to drive an hour to an hour and a half into the city to sit down and work, to drive an hour to hour and a half back. None of us do. Personally, I used to work out of a business club. The problem was it wasn't convenient. It was on the 67th floor of the Sears Tower. And I said Sears, if you're from Chicago, you know what I'm talking about. It's not the Willis or whatever the heck they're talking about nowadays. But anyway, so I would get there. It would take me money and time to park. It would take me 15 to 20 minutes just to get through security and get up to the top floor to be, to then have to go get the person I was meeting with because they had troubles finding it. And it was a beautiful place, beautiful views, one of the nicest, clubs in Chicago, but very inconvenient. And it would take me, a good chunk of the day just to get in and out. That's one of the things people are looking for. The world's evolving right now, and the need is there, right? Many of us would like to work from home or are working from home, but there's not an ideal situation. And so we're looking for that solution. And that's really where we came in. Local, immersive experiences where you can work, 10, 15, 20 minutes from your kid's school, from your home, and very, very useful. So we basically take
Hey
the
Derek, real
stress.
quick, I'm gonna
Oh, yeah.
I'm gonna cut you off for just a sec.
Yeah, feel free.
If you stop sharing your screen, I'll start sharing mine, and I'll flip through
Okay.
the slides for you. If
Sounds good.
you don't mind. It just said loading for some reason, but let you keep going.
Sounds good.
How's that?
Perfect.
Hmm. Yeah.
So as we I think are all seeing, right, the COVID world, the working world has evolved. Are some people going back to the office? Yeah. Are some people working from home? Yes. I'll just tell you my personal experience. I love working from home. I love having flexibility. I think we all do. If you're at the phase in your life where you're investing, I'm guessing you probably like flexibility. The problem is I don't like feeling like I'm shooing my kids out, right? I mean, I wouldn't, but you don't want to feel like that. You don't want to feel like you have to lock the door on them or you got animals. I got a bunny, so it's not too bad. But if you got a dog or a cat, something of that nature, then, it can be a little bit challenging, and you just want to put on a professional environment. But you also, again, don't want to drive 45 minutes to an hour one way just to do a meeting, right? And so that's really what we're looking to solve is a workplace that fits the needs. And what our locations become is effectively the business hub of the community. And so that's really what we're looking to be on demand, right? Come and go as you please, and each person's different, but I would go into that other workspace I was using before and I felt obligated to like talk to the person for 5 or 10 minutes. And these are tech enabled. You come and go as you please. I walked in. Oh, I'm sitting at one right now. I walked in. It was literally raining and sleeting in Chicago. Yesterday it was like 75 and I was walking. It was beautiful. It's raining and sleeting. I come inside. I open my app. I click the little button, unlocks. I walk in, right? It's beautiful. I came in, sat down, and started talking to you all. So they're frictionless on-demand workspaces that you can run off an app. Who's using them? Your worker that's hybrid, right? I think most of us are going to land somewhere in the middle, even if there's a back to office criteria. If you're good, they're going to want to keep you. One of our top advisors, high level at JP Morgan Chase, and Andrew, I think, shared this story yesterday, but we asked her, I said, your boss is saying everybody's going back to the office. And she said, well, yeah, we'll see if that happens. The good people, we don't want to lose. And so, they also just built a multi-million-dollar office, so they got to get somebody in there working. But anyway, that's a different topic. So I think all of us realize that work has evolved. Freelancers, right? Your side hustles, you want to do things after work. You want to do things at lunch between work. You want to get things done. And we have many small businesses that just need a professional environment to be able to conduct business and not have to worry about cleaning. They don't need a huge footprint and they maybe don't need it every single day. And so it's really just designed to curate your work experience. So moving along, you're going to see here, and this is one of the stats that floored me. So I'll pause here because, and maybe some of you are in this category, no judgment, but 42% of people don't understand that this way of working exists. Now, if you're around an area where you see some shared office or some co-working, you're probably like, how do people not know this? But 42% of our market that we will be, taking on in the next few years doesn't even know exists. So we're already doing well. And to know you got nearly 50% of your market still coming to your front door, still waiting for you, is an exciting place to be. You'll also see here, and this kind of just highlights what I've been going over. I won't take a ton of time on this, but people are utilizing the hybrid work environment at a significantly higher rate than traditional office. So pretty simple there. We'll move through that. Another great stat, currently use a shared office space is up 54%, right? That's 2002 numbers. So these are just showing all the reasons, all the data on why people are looking for exactly what we're offering. So proof of concept, what's the pudding taste like, right? Well, here's what we do. We acquire underutilized or distressed buildings. Our first proof of concept was in Park Ridge. It was the oldest building in Park Ridge. It was a old Italian restaurant. We actually got some before and afters for you today, so stay tuned. I actually just saw one that I've never seen, so I'm excited to show those to you. But we acquired an underutilized building, an old restaurant that was kind of the one building in this very A-plus neighborhood that was not utilized. We repositioned it into hospitality-driven co-working. We do all the construction. We're vertically integrated. We have our own construction company, which mitigates a lot of the risk in this deal because that's can be one of the time and money drains on the deal, but we control that. And then we achieve strong private office occupancy and member retention. And so we actually performed above our targets, and we're now an established business spot within the community. So it's a really neat place. It literally becomes a business hub. I've been in meetings where somebody pulled somebody else in and said, hey, let's go see if so-and-so is available. They know this stuff very well. And I've watched it happen with my own eyes. And so, as you go to a rec center to work out with your friends and, get in shape and, maybe you meet up there once in a while, this is the place in your local community where people come and work. And here's the part you all want to know, show me the money, right, Jerry? So here's the bottom line. We refinanced, and what we do is we buy, and I'll come back to this, but we refinanced out, and we basically were able to refinance over $600,000 in that first deal. 33.42% IRR, internal rate of return, for those of you that are on that, and a 4.12 equity multiple. We projected below that. We exceeded all of our numbers beyond what our pro forma said. So very, very proud of the original concept and the first location to come full circle. Anything to add there, Andrew?
I think it's excellent. I'll jump into the before and afters. These are fun. So Park Ridge, just outside O'Hare, in Chicago. And if you've been to Park Ridge or any of our locations, please comment in the chat. We'd love to know who's been in the hood. So Park Ridge, this old Italian restaurant. So I have three daughters, and they love the color pink, and the whole building was that color. And so they were disappointed. They were probably the only ones in the community that were disappointed that it didn't get left that color. But this color here, pink, was left inside and out. You could see that there was an old pizza oven out there, and where the bar was, and you could see that transformed into where the pizza oven was, where the barrels are. That became our conference room. And so there's a garage door on there so that you can be an interactive conference room, larger meeting space. And then where the bar was in back, that's now an office. And so now that's been a private office that's been taken since 2021. An attorney has that office reserved. Lots of fun before and after shots. Our second location is in Deerfield, Illinois. So again, shout out if you've been to Deerfield, Illinois. Deerfield is less walkable than Park Ridge, but has a tremendous downtown. Actually, there's Sweet Greens just went in there. Starbucks is down the street. Chipotle is down the street. And so that's the idea, is that these are in highly trafficked locations. So Deerfield, this most prior to us, this was a music shop. So it was retail music, and they were teaching kids how to play instruments. They ultimately moved locations, and then the second floor was apartments, and so that got transitioned into our on-demand office space. Glen Ellen. So Glen Ellen is where I'm currently at. I'm in a phone booth in Glen Ellen at the moment. Glen Ellen's a tremendous downtown. This building was a restaurant on the first floor and uh, pretty awful apartments, to be honest, on the second floor. I had to ask the person living in this apartment. I asked them why they continue to live here in these conditions. And they said, "Man," he said, and they spoke about the vaulted ceiling and the woodwork. And as you can see, we left the beams and left the vaulted ceiling and turned it into this is probably the most popular room at brick and mortar Glen Ellen. But anyways, it was that was a fun project. And now it's a very successful, thriving co-working space. Libertyville, Illinois. This was Indian Motorcycle dealership. If anyone knows Indian Motorcycle, shout it out in the chat. It was Indian Motorcycle's showroom, and then it was on the market for, gosh, maybe 18 to 24 months. That's the thing. These are distressed piece of real estate with restaurants and retail downsizing. Ultimately, people don't know what to do with these larger spaces in these high profile A+ locations. And so we came in and said, man, this is an incredible building. Bow truss, bow trusses throughout, as you can see. And then we turned them into brick and mortar Libertyville. What you're seeing in front of you, you have the comfy seats along the window, which is along Milwaukee Avenue. And then these are called focus stations. So this is how the concept has evolved before. And I'll just shift back real quick. Right, you can see Park Ridge, Deerfield, lots of open seating. And the learnings, Glen Ellen, lots of open seating, is that people want to work around other people, but not near people. Everyone, if you walk in really the concept you can think about, you walk into a cafe, you walk into a restaurant, the most popular seat, now you're going to notice this when you go in, the most popular seat that's ever taken is in the corner with your back against the wall so you can see everything, right? And so the idea here is how do we make that seat available for as many people as possible? And so we've created and invented these focus stations where you have that semi-private seating. It actually gets a little bit
Andrew,
better.
you're giving away the secret sauce. I like it.
Yeah. It actually gets a little bit better at our Arlington Heights location, which opens up in the next week or two, as we've added a bit more improvement to the focus stations. And so now we're going to take all of our learnings to Chicago's Lakeview neighborhood. Lakeview is a tremendous neighborhood in Chicago. I'll go through the stats here in a minute. This is on Lincoln Avenue, just south by a couple blocks of Whole Foods. There's multiple Starbucks in the area. And so we've market tested it, and this will be brick and mortar's first Lakeview location. It's roughly 4,400 square feet on each level. And so it's 2 levels, parking directly behind and then directly in front as well. So the parking is super simple. Why we love it. So Lakeview, for all of our suburb neighborhood locations, we're typically targeting 4,000 people in terms of population per square mile. Lakeview is 47,700 people per square mile. And so part of the concern from some of our existing investors is that it's going to fill up too quickly. They asked us if we're ready for a second one in the similar area. Especially, we have 2 investors who are from Chicago, and that was their sentiment. One of them's from Pilsen. Average household income is a bit higher than what we've typically targeted, as you can see at 169,100. Median age is a little lower. That's because Lakeview encompasses Wrigleyville. It actually encompasses 3 to 4 neighborhoods are part of Lakeview. So the Southport Corridor, Wrigleyville, Lakeview East. And so because of that, the age demographic is a bit lower. One aspect that we're excited about is that people are going to find their brick and mortar in Chicago, and then ultimately that'll translate out to either northern Chicago or out to the suburban neighborhoods. Walk score is the highest in our portfolio at 95. It's a walker's paradise. Again, you can literally walk to just about anything from there. So let's get into the details. $1.5 million, so $1,050,000 is the raise, and that goes towards the down payments for the SBA 7A loan, closing costs, constructions included in that, working capital, and I think I mentioned real estate acquisition costs. So how it breaks down for investors. Our limited partners, which are our limited partner investors, they receive 50% ownership, cumulatively 50% ownership in both the real estate and the operating business. If you want to think of this as McDonald's or as Portillo's, right? Each location has its own entity, own LLC for both the real estate and then that operating business. So the real estate will be 3121, so 3121 Lincoln LLC. And then the business will be Brick and Mortar Lakeview LLC. And our investor partners will own 50% of that. Breaking down the numbers here. So cash on cash return. So year one, very light return. Why is that? Mainly because we're in construction for most of the year. And so through construction, your 8% preferred return will accrue. So the moment that you invest with us, you start earning 8% on your money. That will accrue, and then start being paid back year two, and then into year three, and then year three you're seeing some of the accrual start to pay back, and then year four is when we do a cash out refinance event. So we've bought distressed real estate, we've added significant value, and then we've added significant cash flow over and above that by filling the space. Now we're able to go to our lender, proceed with a cash out refinance event where they'll grant us the higher value, provide us cash back that allows us to pay back principal to our investors plus profit. So by year four, at this point, you're 4 years in, and now you've got $0 more in, you have profit in your pocket, and now you get to participate on a pro rata basis, meaning on an ongoing, pro rata basis means in accordance with your ownership, and in perpetuity, which means forever. So indefinitely, you get to participate in those returns. So this becomes an annuity of sorts where let's just call it year, let's potentially quarter, ideally monthly, you're receiving your distributions on an ongoing basis, and you will receive a K1 on an annual basis. And so let's IRR here, 25.46, which, by the way, these are the numbers. We utilize the numbers from Park Ridge. Obviously, we outperformed Park Ridge. We do anticipate overperforming here, but we'd prefer to be conservative out of the gates. Here's an example with a $100,000 investment. So if you were looking to do a $100,000 investment, this is how the returns break down. Ultimately, over a 10-year period, which is what the pro forma is built on, you're earning close to $30,000 a year on your $100,000 investment. That's averaged over the total of 10 years. As you can see, the 10-year terminal value here. Here's the pro forma. So you can see $1,050,000 as an investment, 50% ownership, and this outlines the returns over that period of time. This ultimately would trickle down to, if you invested $50,000, you would see the trickle down effect from that, $100,000, and so on. Equity multiple of 4.22 and an IRR just over 25%. And so with that, a lot of information there. Happy to answer any and all questions. Derek and I are certainly an open book, but really appreciate the opportunity to share, Greg.
Okay, well, thanks, Derek and Andrew. We'll bring Claudia on here, and also just as we tradition to go over all the questions we've got so far, I wanted to just share as well. We've already got Claudia sent me a message. We've already got many of you have scheduled appointments, which is great to get the IRA started. That's the first step. That being said, after you have that first initial call with us, which is like 10 or 15 minutes, then we hold your hand through the process of getting the documentation. We help you fill it out. So per your instructions, we have someone get that document filled out for you to invest in whatever asset that you choose to go into. If it's this or something else, And our speed, as far as getting that done, it takes anywhere from 7 to 10 days. So the whole process should be definitely less than 2 weeks, and should be closer to 7 to 10 days from a phone call with us, getting your money moved over, if you're not already with us, to actually taking action. If you're already a client of ours and decide to invest in an asset, the DOI process typically takes from 1 to 2 days if it's filled out completely. So, anyways, let's bring Claudia on as well and start jamming a lot of these questions. I see lots of them in the chat. Hopefully, if you can try to put more of them into the Q&A, because there's a lot of chat, that would be helpful. Probably mostly to Claudia, although she's been tracking it. So welcome, Claudia. Good to have you. Thanks for being here.
Good morning. Good morning. Yes, we do have some really great questions here. I'm going to go back to when you were presenting, Greg, to the questions that have to do with SDIRAs, and then we'll go to Andrew and Derek. So
Okay.
somebody was asking, can you make an investment using both traditional IRA and Roth IRA funds?
Yes, you can use both accounts. If you've got both accounts, and it's just like I said before, if it's non-IRA and IRA, same thing. They can invest into an asset class. It'd just be two different basically contracts, one in the IRA name and one in the traditional name and one in the Roth name. Yep.
Yes. And you can also use personal funds if you wanted to do this kind of investment with personal funds. So it doesn't have to be SDIRA specific. If you have funds that you want to see grow and you want to put into an investment, then you can actually do that as well. Just book your appointment with Derek and Andrew. Is the bank account held by Horizon Trust or held outside of Horizon Trust?
You're talking about the Checkbook LLC?
They just put that, so I'm thinking that it has to do with the funds, where the funds are at, or the Checkbook LLC. So we'll just go over both.
Go ahead, Claudia, you hit it.
Yeah. So we do have banks that we work with that are FDIC approved that are going to hold your funds if you have a Horizon Trust account. Now, if you have a Checkbook LLC, we have a bank out of Texas that we work with that knows Checkbook LLCs and how they work. They don't have the setup that you would in a regular bank. You don't have to go in, you don't have to have all that, and they have free wires and all that. So we do use that bank, and we'll go over that during the process as well. What is the typical timeline from the start of the application to the time that it's invested, the money's invested?
I'd say 7 days, best case scenario, 12 days is pretty realistic.
Absolutely. What are the fees for the SDIRA? I think you went over this, but do you want to go over it a little bit more?
Yeah, just real quick. So the first year fees is typically $595, which is your setup and annual, but right now it's $495 for those you set up. So it's $495 for first year setup and annual, combined total $495. And then every year thereafter, our fee is on a sliding scale. It's based upon asset value. So you're going to pay no more than 1%, but the average I'd say is about 60 to 70 basis points, which is a little over 0.5% per year. We can go over that with you on the phone call.
Absolutely. How do I know if I qualify for a 401k? I know that you were talking about UBIT at that point. So I think it was, hey, I can get exempt with a 401k, but how does one know if they qualify for it?
If you have a business that you are the owner of and you don't have lots of employees, you can qualify for a solo 401k.
Awesome. What is the best way to recover from a client that made a mistake in taking withdrawal to themselves from their LLC? From the Checkbook LLC, I'm assuming they're asking.
So if it was a prohibited thing that you did, I'd say the best thing to do is just shoot us an email, and I'll get someone on our team, on our compliance team, to give you some insight that you can go back to your CPA and talk to them about. And maybe there's still a way to help maybe potentially fix it. So yeah.
All right. So let's go to Derek and Andrew. It's
Greg, you
Tatiana
nailed
is
it. Way to
asking,
go.
so it's the minimum amount to have already together to invest at least 100,000?
Typically, our minimums are 50,000. 100,000 definitely works.
Okay. Somebody's asking, you mentioned after year 4, the proceeds from this investment will continue. Can you please explain that a little bit more?
Of course. So you have the real estate, and then you have the operating company. Year 4, at this point, now we've ramped up the operating company. So we we all own both, right? So we own both the real estate and the operating company. And now once the real estate is acquired, it goes through construction, and now it's up to the business to ramp up. And so now offices are being taken, co-working is being utilized, meeting rooms are being activated, programming is being activated. And so by year 4, the business is stabilized and then some. And now we're doing a cash out refinance event. So we're refinancing the real estate, pulling cash out to repay our investors plus profit. We'll also see distributions at that point. Just so we're clear, investors receive their 8% first, along with their principal, before we receive any distributions. And then now the investors are made whole and then some. And now we all get to participate because the business is going to keep operating indefinitely. And so as it continues to operate, let's just call it on an annual basis, right? There's going to be net profit that will be distributed on a pro rata basis.
Perfect. Somebody is asking, can I get a phone call to get a better understanding of this deal, and then I'll make the decision? That's a great question.
Of course,
Yeah, let's
absolutely.
put Courtney's, right? Is it Courtney's email that we're still putting in there? If they want to, if you want to schedule, yeah, let's put Courtney's email in there. If you want to schedule something directly with Andrew and Derek, email Courtney and she will set up a call with them.
Yeah, she's our
Courtney's
chief of staff, just so you know. So she, yeah, make sure everybody is well taken care of and followed up with and on our calendars. And yeah, we can't wait. Honestly, a lot of our top investors, hearing it a second time was definitely helpful. Just make sure everything was clear, and especially if you're utilizing, Horizon Trust, get that process going. We can start talking and see if it's a fit.
Absolutely. Stephen is asking, I have an HSA currently for a company that I work for. Can I transfer this HSA to a Horizon Trust HSA?
Depends. Normally you can, but sometimes you can't. It depends on the plan. And so again, that's the best thing to do to be schedule a call with us, do a free consultation. We'll look at it and let you know if we can move it or not. And look, that's the most important thing. Educate yourself on what your options are. And, some plans are designed different than others, but typically you can move the HSA.
Perfect. Arlene is asking, how would it work investing in an investment like brick and mortar if I would age out and need to take mandatory distributions in less than the 10-year projection? Is it a good investment for those that are in their late 60s?
I can answer, and then also Andrew, if you're, go ahead, Claudia,
Sure.
you want to?
Yeah.
Go.
So for most people, the required minimum distribution is going to be from all of your accounts. So if this is not your only account and you have money somewhere else that you can take the distribution for, it doesn't matter where you take it from. So if it's stuck in an investment or it's still in that investment period, then you can go to your other accounts and take the required minimum distribution from there. Greg, did you have something more to add?
Nope, that's right. You can do that, and in typically required minimum distributions are smaller amounts, and they're small percentages. And so, if it is pushing off distributions every year, a lot of times those distributions more than cover your required minimum. And in case that it is not, there's other things you can do as well. But yeah, go ahead, Andrew. Did you have something else you wanted to share?
I would just share that several of our investors are previously either corporate professionals who have retired, angel investors, and I'll share that both of those they've really enjoyed this vehicle because they're not necessarily looking for the home runs or zeros, right? So for the angel investors, they've transitioned they want real estate backed investments where they can see ongoing returns. And for those who have retired, they really enjoy the opportunity to have ongoing income on a regular basis.
Perfect. I have Stephen asking, as part of your raise, are you using all of the raise from investors or do you hold a percentage investment funds held by the company alongside the investors?
5 to 10% is typically coming from the company.
Awesome. Somebody's asking, can somebody invest personal funds instead of just IRA funds? We did go over that. Do you want to go over how that process works a little bit?
If they wanted to invest personal funds?
Mm-hmm.
Sure. So personal funds, we can connect, and there's two different routes to go. If you're an accredited investor, you would then be able to sign on with the operating agreement and fill out an accredited investor form. If you're not an accredited investor, we would handle that through a investment club.
Okay. After the 4 years, can I renew the contract and continue to get my returns or dividends?
Yeah, so that's the beauty of what we're doing. We very much believe in creating generational wealth. And so after the cash out refinance event and you've received your principal back, and you're still earning returns on a go forward basis, you now have the opportunity to do whatever you want with your funds, right? If you'd like to reinvest with us in a new opportunity, you absolutely can do that and multiply your money that way, or you can take that elsewhere.
And
And
then one other thing, Clyde, I think if Alicia's doing it, a reminder, if we can put in the bottom here in the question answer the link for those of you, I know she's put it up there a handful of times, want to schedule an appointment with us and or get with Andrew and Derek, schedule an appointment, take 5-10 minutes or an hour, whatever you need to kind of go over if this is the right fit for you and what type of IRA or container is the right for you as well. I think that is typically the first step to see if it's a fit, and or your retirement account even qualifies. So go ahead, Claudia.
yes. And Stephen is asking, can an HSA invest into this type of account? That would be for Andrew. I mean, it's the same as an SDIRA. It's just a type of account, but I wanted to ask anyways.
As long as it's good on your end, it works for us.
Yeah. Okay.
It'll work.
Leslie is asking, I am in the process of setting up an account at Horizon with an LLC for a different deal. Could I use the same LLC for this deal, or does it need its own LLC?
Same LLC. You can. That's the great thing about the LLC is you got control of it, so it can make several different investments.
Will dividends be paid annually or quarterly?
They start off annually, and then with the idea of shifting to quarterly. Really, the reason for that is just to be able to review the taxes and understand the net profit. Once there's a pattern achieved, then we can responsibly distribute on a more regular basis.
Perfect. Terry is asking, what happens if the location you invest in is sold to a new owner or corporation?
Good question. Haven't had that question before. We have no intention of doing that. If it was, I guess, so let's take it. Let's size out a little bit. If we were to exit the entire business or one location, it would be similar to if you look into Portillo's is a pretty good example. So Portillo's, they have Propco Opco, so they owned their own locations and they own the business at that location. So very similar model. Berkshire Hathaway came along and purchased all of their businesses, and so they purchased all the Portillo's, and now Portillo's solely owns the real estate with, in my opinion, one of the best tenants in the world, Berkshire Hathaway. And so if that was the case, then there's a possibility that investors, right, in this scenario would then, if the brick and mortar business got purchased, then you'd see the proceeds from that sale along with the ongoing income from real estate. If just the real estate got purchased, then you'd see the proceeds from that and then the ongoing income from the business. If all of it got purchased, then you would see the positive effect from that as well.
What about cost seg for these properties for this type of investment?
Yeah, that's a great question. I typically don't mention it, but if you are, we should talk about this one-on-one. If you're a real estate professional, feel free to shout out in the chat. If you're a real estate professional, it'd be great to know. Cost segregation typically applies best for real estate professionals. So if you're on your taxes, your personal tax returns, if you're listed as your occupation as a real estate professional, we can talk about doing a cost segregation study because it certainly would benefit you depending on your individual income and needs. So open to that. It's something we would move forward with if the investors that were included, if it made sense to do.
And I know there is a listener, by the way, who if you're a real estate investment professional, so a real estate professional, and so that would qualify for you if you're listening. So
Leslie's asking, is there a deadline to participate/commit?
A deadline is out. Yep.
Mhm.
So
Yeah.
we are actively raising. We are working towards a closing date for this property, and so within the next 30 days, 60 at most is when we're looking to get this all sorted out. It was good to hear that Greg's able to move quickly through this process because we're ready through due diligence on this project and just finalizing the financing at this point, and then we'll be ready to close. So we do anticipate this being rounded out here pretty quickly.
Perfect. Arlene is asking, so when you talk about distributions after year 4, do those distributions go into the Horizon Trust account directly?
yes, once the asset is purchased and invested with your IRA, it stays IRA. So that's hopefully that's a positive thing because you're not paying taxes on those gains that are continue to pay out like an annuity year after year. But yes, all that, and then eventually when it goes to sell, those proceeds also go to the IRA. Yeah.
Perfect. Steve is asking, do you have to deposit your dividends back into, that's the same thing. Even if it's a checkbook LLC, it's still retirement funds, so those would go back into the LLC itself. Scott is asking, what about ongoing property management? Who's paying for that?
So Brick and Mortar HQ actually provides the services for each location. What's great about our models, we have fractionalized services. So we have a member success team that oversees all of the locations. And as we add more locations, that cost gets diminished over all of the different locations. So long way of saying in-house management and maintenance.
Do you accept BTC?
What is BTC?
I'm not sure. So, Greg,
Okay.
do you?
I mean, is it Bitcoin? I mean, I don't know if that's what I don't know.
Oh, Bitcoin.
Peyton, if you want to tell us what BTC is, we're more than happy to
Yeah,
answer
it's
that
Bitcoin.
question
Nicely
for
hooked us
you.
up.
Yeah.
Nice job,
If
Greg.
it's Bitcoin, yeah,
There you go.
not
Yeah.
yet is the
Bitcoin. She
answer.
No.
said Bitcoin. Yeah.
Yeah, that's what I thought. You made
That
me think about that for a second. Like, is it a different acronym that I
Carson
should
would
know?
have known. Greg's
Yeah.
son would have known that.
And for Arlene, yes, the management and maintenance in the pro forma, yep, it is all outlined and taken into account. The great part about the maintenance and the management, well, I'll say for the maintenance, because it's a brand new building, the maintenance is almost nothing at the beginning. It's professional cleanings that need to take place, and then the management is worked in.
And just to reiterate, the tech enablement allows us not to have
Hmm.
a human sitting at the front desk, as a cost to the bottom line. And so that we're able to, like you said, spread out, the member success team across multiple, which makes it, very small to the bottom line.
Okay.
Good
Steve is
question, though.
asking if you have
These guys have
traditional and
invested
Roth.
before.
If you have traditional and Roth IRA, do they have to be invested separately? Would each have to invest a minimum of 25,000, or could you combine both accounts and come up with the 25,000 minimum?
I believe, I assume you're the same as all the other investments that we've seen. You can combine. Now, combine just means it's a combined number. So let's say there's 12,500 in each account or whatever the number is, but it's over $25,000. You would have two different contracts. You would have, because they're two different entities basically. There's a Roth and a traditional or simple or a SEP. So they're two different containers as we talked about it yesterday. So the one would be for the 12,500 and the other one could be for the whatever, 14,200. Combined, it's over the 25,000. That's typical for most investments.
Is that the case, Derek and Andrew?
Yes,
Yes.
that
Yeah.
is correct. Hmm.
And we'll hold your hand at Horizon Trust to make sure that all of the paperwork is correct for both accounts, because we do have to have paperwork for each. It's a different set of it's a different account each. So we'll go over that with you as well. Valerie's asking, I have an LLC. How can that help me set up more profits on my LLC? I don't know if she's asking for a checkbook LLC or if it's just like a regular LLC. We would need more information, Valerie, on what that question is. Arlene is asking, how can we combine an old traditional IRA and a SEP prior to investing?
We can help you with that. On your first call with us, Arlene, I think you were one that scheduled an appointment with us. Actually, you're one of the. By the way, we get real time as appointments are being set, which is pretty cool, right?
Oh,
Now with all this
Herlean, way to
automation,
go.
so we can tell you, but we'll get those combined into one. So yeah.
Okay, I'm gonna end with one more question, and then we can wrap up. Johnny's asking, I rolled over a 401k to my current employer 20 years ago. At the time, it was only around 30,000. Am I able to pull the previous 401k to a self-directed IRA with Horizon? That is a great question. The answer is no. Once you roll it over to the 401k of a current employer, then it's locked in until you're no longer with that employer. What could have happened is if you didn't do that, then we can take that 401k and turn it into an SDIRA or a self-directed account, and you can start your 401k with your current employer. So you could have both vehicles. But once you transfer it over, it's locked in there until you're no longer with that company. So next time.
I think there's
Okay.
a good question here too, real quick. The Williams Bell one. If you're not accredited and you're part of the group, do you still get the same benefits as if you were a direct LP? You mind answering that real quick?
Yep. The short answer is yes. You receive the same benefits. It's just a different structure to help you invest.
There you go. We have a lot of people using that club option that are
Yeah.
clients of ours at Horizon Trust Company. I don't know. I feel like there's 5 or 10 a week that come in that are investing in the club kind of option. So it's really interesting. So yeah. And we also have to give a gift away as well. The most active, whoever's the most active here, we'll do that, and then we'll wrap up here. So, Claudia, is there anything else you wanted to hit on as we wrap up?
No. If you guys have any other questions, there are some questions that we need more information on. So just book your appointment and we'll be able to answer them one-on-one based on your scenario.
Great. All right. Well, as we wrap up, Claudia, I'll let you. I'm sure they're the people behind the screen there telling us who the winner is of the most active. Let's hear that.
Yes. Let me go ahead and.
As you get it, hold on. I'm just going to
Yes.
remind everyone my sales pitch. $495, set up your IRA. There's no reason not to do this. It's less than what you're most likely paying unless you have like a $10,000 IRA. Then it'll probably be about the same amount. But there's no reason why not to get yourself directed, either create it and start from scratch, a Roth, or just a traditional. Get your money moving, start taking action. I saw a few of you on there. I was like, hey, man, I heard this like a year ago or two, and I haven't done it, so I'm going to do it now. I appreciate that, but don't let that be you. Take action, and get with Andrew and Derek. For us, we want to educate, and we appreciate that. So, anyways, as we wrap up, let's before you give out the last thing, Andrew, Derek, any last minute feedback?
For us, we very much appreciate the time here. We do also appreciate educating. So if you have interest or just simply want to learn more, we'd love to connect with you. No hard sell from our end, because ultimately we wind up being partners. So we want to partner with the right people. And for us, typically the right people are the most educated people. So we want to do our best to give you all the information that you need and help you make a good decision one way or the other.
Yeah, I'll just reiterate, they both said it very well, but I think we've looked at other trust companies. I think Horizon Trust brings a ton of value, so you can be the judge for yourself. And we're very excited about what we're putting together. And kudos to each and every one of you. 2 days in a row, took the time out, to get educated. A lot of people talk the talk, but they don't walk the walk. And so good for you for being on here, putting one foot in front of the other. And I would encourage you to at least get information from this point on. Sometimes your individual situation, as you ask those questions, it sheds light on things, and there's paths that you didn't realize were there. So I would encourage you to at least reach out, chat. It doesn't hurt to get information, and hopefully you've gotten some great value from this. We've enjoyed sharing, and thanks for the opportunity, Greg.
Great. Thank you, guys. All right, Claudia, why don't you wrap us up? What do we got here?
All right. So our winner for the most active is Arlene. I know you guys saw her. She asked a bunch of questions and she scheduled her appointment. So we're excited. Arlene Perkins. And for the SDIRA, the free SDIRA, we are going to have Tatiana.
I didn't say we're giving out a free SDIRA. Okay, all right,
Yes,
go
we
ahead. Okay.
We did. Well, I'm giving away an
Okay.
SDIRA, so we're
Claudia's
going to go
giving
ahead
it
and
away.
give one out.
Okay.
Tatiana Beninaula. That is who is getting a free, it's self-directed IRA.
Awesome. Awesome. Well, look, once again, schedule an appointment. If we didn't answer one of your questions the way, at least maybe we didn't get the full picture of it, just schedule an appointment with us. We would love to hear from you. And again, my email is Greg Herlean at Horizon Trust Company, or go to one of our links. You know how to reach out to us. You've got the registration here. So really appreciate the time for the last couple of days, and look forward to hearing from you more. Thanks, everybody. Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.